Welcome back, guys, to another roundtable. My name is Adam. With me once again, I have Rusmin.
Hello.
And Victor.
Hi, everyone.
Thank you so much for joining us. And today we're going to talk about how you can prepare for a bear market.
Yep.
So I think markets are very choppy nowadays. Everyone's thinking it's going to be a recession. They think that maybe the market's going to go down. Very volatile right now.
Yep.
Right,
Yeah.
guys?
Yeah, just recently, I think Jamie Dimon actually says that brace yourself for economic hurricane.
Hurricane.
Whoa.
That's a big word.
Yep.
Yeah. So I think it's a bit jittery nowadays. People are wondering what's going to happen. Inflation is up. The fears of recession. So the market has come down quite a bit. So I think this roundtable is just about how do you prepare for a bear market? What do you do? How do you save? And how do you invest? All right. So we're going to cover all of this at this roundtable.
Yeah.
All right. So I think first things first, we should do a quick recap of where the market is right now. So tell us.
Yep.
Yeah, okay. So I think if we look at the U.S. market, I think the best indication would be looking at the S&P 500 index, right? So that represents the U.S. 500 biggest U.S. company. And yeah, if you look at the index performance from the peak to the trough, from early of this Jan all the way to right now at the time of this recording is in June. I think briefly in May we saw S&P actually enter into a brief bear market, but then it has rebounded a little bit until June. Today it has also rebounded, but it's still down about close to more than 15%, right? So but if you look at NASDAQ 100, where a lot of US tech companies like your Microsoft and Amazon, Facebook, I think that market have actually crashed big time. Okay, so in May they actually briefly they crashed as much as 29%, but today at the time of this recording they are still down about 24%. Okay, so technically they are in the bear market still.
Okay.
Yeah.
Yep. So that's for the US, and I guess around the world it's pretty much the same as well.
Yeah, I think if you look at the Hang Seng Index, I think it has crashed last year. So
Yep.
it's
So
still
no
crashed.
change. Still crashing.
It's still crashing,
Slow
but
motion.
it's better as compared to US actually, because it's not. It hasn't gotten to their low in March 2020 this year, right? So yes, even in fact higher than their March low.
Okay.
But it's still down about 31%, as a year to date, right? And yeah, so if you look at the Hang Seng is it has crashed. They are technically in the bear market. Stretch time has crashed very little, high single digit, but then now we are at about 6% down. Okay, so I think Singapore market didn't really crash. In fact, it has been
Holding very well.
holding quite well.
All right.
Performance in terms of performance is probably one of the best.
Best markets.
Yeah.
So far this year anyway.
Yeah.
This year, but of course
But
over the long
worst
run.
market in the rest of the years.
I would say that. I mean, come on,
Yeah,
we
that's a
have
joke.
pretty good companies here as well,
Yeah,
especially
so-
for dividends. Yes.
Yeah. So again, Singapore is very good market for dividends. Likewise for Hong Kong. We look at Malaysia. I think Malaysia have done pretty okay, very flat. It's very similar to Singapore. It has crashed by only 5%. I don't see it as a crash, mini correction.
Okay.
Yeah. So Singapore and Malaysia is holding up quite well.
All
Basically.
right. I think we should bring the focus back to the US because I think most investors are looking at the biggest stock market in the world, right?
Yeah.
Yep.
All the best companies are there, and that's where the attention is.
Yep.
Because the like you said, the Nasdaq, a lot of the big tech companies, which are some of our favorite stocks as well, have come down quite a bit. So like you said, the Nasdaq is down 25%.
Yeah.
Thereabouts, right? So that technically means it's in a bear market because there's a drop of 25%.
Yeah.
Yep.
So I think this would raise the question of what's going to happen next. What are you going to do? Should we take opportunity now? So I think that's where the market is right now. So we're going to focus now on what we should do with the information that we have. So how do you prepare for a bear market like that? How do you manage your what do you do?
Yep. So I have this 4-step system for myself, right?
Okay.
I think firstly, when it comes to preparation, the top priority is to really have emotion preparation, right? Before even you go to stock investing or understanding the thing, right? You need to understand about market correction and crash. Okay, so when we talk about market correction, it's usually less than 20%, right? Bear market is actually more than 20%. So with that information, right, if you were to go back to the past correction and crashes for the past 94 years, since 1929 all the way to now, right, you realize that, right, correction happens, right, 72.1% of the time, which is crash between 5 to 20%.
So you mean whenever the market comes down,
Yep.
over 70% of the time,
Yep.
it comes down 5 to 20%.
Correct.
Okay.
And that's happened 68 times in the past 94 years.
Okay,
Right. So
there
that's 72% of the 68
All right.
68
okay,
time, right?
Got it.
And bear market, which is more than 20%, happens 27.9% of the time.
Mhm.
Right. So first thing first, we need to understand that one thing that we can confirm, this is not your last correction or crash.
Okay.
It will always happen. So with that, right, you have this mentality that crash and correction is very common. So when every time your emotion is prepared, right, when you go into the market, right, you don't feel that much of a fear, because a lot of people, when they go in, right, they're not emotionally prepared. So when the market keep crashing, right, they're very scared. They don't go in, and by the time when they go in, the crash is already over already.
Okay.
Right. So that's one thing I need to bring across. Right. So this is to allow you to, when the market crash happen, right, you have the guts, regardless of how people say about the market, the recession, right, but you got the guts to continue to invest in this time, and usually it's the hardest, I would say, right. And also the next thing is emotionally that you need to understand that I think I'm not so sure for the rest, but in most cases during market crash when I buy, right, it always go down.
Okay.
Right.
All
So
right.
the market don't just crash and you buy and just go up, right? You will just keep crashing
No
and
one
crashing.
can time it perfectly.
Yeah, nobody
right?
can time it. So it's very common. Okay, don't
Yeah.
be sad when you buy and the share prices go down. It is okay, and always be patient. Don't be too overly excited, because a lot of people, when they say, "Oh, market dropped 10%," very happy, they go and buy. They put a lot of money inside, and that's where they
And
realize.
then it goes down some
Yeah,
more,
I
and
said
then-
after that they
and
got
then
no
they
bullet.
feel upset
Yeah.
about that.
Okay, always focus on the valuation and the
Okay.
company that you're going to invest in. So don't be too greedy, but follow a system which Rusmin will explain later on. Right.
I
So,
think,
yeah.
I think when it comes to emotions, that's the basic
Yes,
thing
correct.
that you must have
Yeah.
before you invest.
Correct.
Because if not, you're going to go score all over the place,
Yes.
right?
So that's why I say this is the top priority, because if you do not have this, right, the rest of the thing I tell you, right, or the rest of the thing that Rusmin or you are going to share, right, is useless. Right?
Yeah.
You'll throw everything out.
Because I can think of a great example where, let's say the market's dropped 20% and you buy, which is actually a good thing to do in
Yep.
theory.
Yeah.
But let's say it drops to 30% and then you get scared
Yeah.
and then you sell.
Yep.
And you basically turn your good position
Yeah.
into a losing position.
Yeah. So
Yeah.
sometimes my question to such people is, if you can buy at 20%, why can't you buy at 30%?
Yeah.
Yeah.
So your emotions have to be in check.
Correct,
You really
yeah.
have to have that nailed
Guts,
down. Yeah.
guts,
I mean, the
yeah.
control.
I think
Yeah.
over the last 1 year, we probably have seen how the market actually have performed.
Yep.
I think a lot of people have probably lose money.
And
especially
given
if
up the stock market.
yeah.
Give up.
Especially if you invest in like US tech stock or those COVID beneficiary stock. I think from the peak to now, I think most of them probably down by at least 50%.
Yeah.
Okay.
To 90%.
Except for
50
your
to
big
90.
FANG, probably down 30, 20.
I mean,
Yep.
those are like the growth stocks. Those were
Yeah.
like those who benefited from the COVID boom
Yep.
and all that.
Yes.
Those went up to the sky.
Correct.
And
Yeah.
And most of them are now below the COVID price.
yeah,
Yeah.
they've given back all the gains.
Yeah.
Right? So I think the first thing is basically emotions.
Yes, correct.
Must have that. So
Yeah.
once, let's just say you have your emotions
Yep.
in check and you're
So-
ready for this. It's
Yes.
like, Victor, I'm ready.
Yeah.
Tell me what to do next.
So I think the next is cash preparation, right? You must always have cash, right? Regardless whether there's going to be recession or not recession, right? Especially during the bull time when things are really good, the more you should, buffer for more cash. You should save more,
Mhm.
because recession is always around the corner. That's
Yeah.
what I always feel, right?
Yeah.
So you must always prepare. And when you have the cash, right, you only invest cash that you don't need,
Mhm.
right? You don't invest cash that you need the next 1 year, 2 years, or maybe the next 5 years, because investing is a long-term game.
Mhm.
And sometimes it takes times to recover, right? Crash can happen usually 6 to 2 years, right?
Mm.
They will keep going down for 6
6 months to 2
6 sorry 6 months to 2 years. Sorry,
Okay.
For-
6 months to 2 years.
Yeah, but for the last 2 years, I think we have seen the bull and bear market.
Yeah.
2020 was
That was
COVID year.
exceptional.
COVID was
yeah,
really
COVID,
fast,
yeah. Then
yeah.
2021 was still a good year, but in second half it started to crash,
Yup.
and then now we are in a lot of stock actually have crashed
Yeah.
quite big time.
So
Okay.
the market has been volatile in the recent years as
Okay.
compared to the past. In the past, it usually take a long
A
long
longer
time to hit the
yeah.
bottom and a long time to go back up to the top, right? So my take is when you have cash, right, you have to split them into 3 tranches.
Okay.
Right. So why I say split them in 3 tranches is because if you were to look back into the chart that I was mentioning just now, right, more than 20% happened 27.9% of time, and more than 35% peak to trough crash of the S&P 500, right, happened 11.8% of time.
Mhm.
So that's the worst case, and most time, right, by that time happen, right, most people do not have the cash to invest already,
Okay.
right? So there's always emergency cash I feel you should hold in case that at the worst possible scenario you still got cash to invest. So so when the market was crashing and hit the bear territory, you should be investing between the first tranche and the second tranche,
Okay.
right? And make sure that you have no debt,
Yep.
right? So that's the important thing.
Yeah, I
right?
think we've covered how we can deploy, our trenches when it comes to investments in the previous roundtable. Go check that one out.
Yep.
We actually go into more detail
Mm.
into how you can deploy
Correct.
your investment in stages rather
Yep.
than just like dumping it all at one go.
Yep.
So do check that one out. So I mean, you need cash. Without cash,
If you nothing,
you can't invest.
You can't do
Yeah.
investing.
yeah, you can say it's time to buy, but you got no
Yeah.
cash. You can't do anything.
Yeah.
Yeah. So
So the third step I would say is the watch list preparation.
Okay.
Right. I think when the crash happen, right, usually you got no time.
Mhm.
Right. Most of the time things happen very fast and especially during the most extreme fear, that's the best time to buy. And the most extreme fear may just last a week or two or maybe longer. It depends, right, on situation.
Mhm.
Right. So having a watch list of company, you are able to act at a very, very fast pace as compared to other investors who are still doing their homework, right? You don't build the ark when the flood come,
Mhm.
right? You build the ark first and wait for the flood. So
Okay.
that's why I feel it's very important. And next thing is when you have the watch list of company, right, be very, very selective. A lot of people tend to diversify too much. So they take the cash, they buy into 50 companies, and all the 50 companies they bought drop another 20 to 30% and they got no cash because they spread too much already.
Okay.
I mean, be selective, concentrate, but not to the extent of maybe less than 5 stock, but you can concentrate in 10 or maybe 15, I would say,
Okay.
right? Because usually retail investors, the sum is not a lot, right? So
it's like having a soccer team, You
Yeah.
want the
Yeah.
best players
Correct.
on the field all the
All
time.
right.
Yeah.
You don't need a squad that's too big
Correct.
because you
Oh,
don't.
yeah.
Not everyone gets to play,
Yeah.
right?
Yeah.
so buy your Stephen Curry.
Okay, so he's
Yeah.
talking about basketball.
Basketball,
So
different
different,
frequency.
different.
Yeah,
Basketball
I'm a
have
basketball
5
guy.
players though. Super concentrated.
Soccer will be better.
Oh yeah, soccer will be better. Yeah,
Better.
yeah.
So yeah, you do need a watch list because
Yeah.
I think a lot of times you want to be prepared. So cash is one way of being
Correct.
prepared, but knowing what to buy
Yeah.
is another way of being
Yeah.
prepared. Because once the crash happens, you don't want to start scrambling. What do I buy? What do
Yeah.
I buy? You want to know exactly. Say, oh, I've been waiting for you all my life,
Correct.
Yeah.
and I want to buy.
Buy your highest quality
wanna buy-
companies at
yeah,
the right valuation.
Correct. Yeah.
Right.
So you really want to be prepared for when it happens.
Yep.
Yeah.
Yeah.
Okay, yeah. So my last one is actually rules preparation, right? Actually, it's not rules, it's just rule only. Just one rule,
Okay.
right? Is to stick to your system and don't deviate,
Okay.
right? Because a lot of people, when the crash happen, suddenly a lot of new rules come out and they just
Okay.
go all over the place and all this. Okay, if you set this system before the crash happens, stick to the system.
Mhm.
Okay, and after the crash, evaluate how effective the system is.
And then you can tweak it.
Then tweak
And-
it, right?
Okay.
Because there's not only going to be one correction or one crash, it's going to be many, right? So you get better after every crashes.
And you talk about evaluating the system, right? And if you do it during the crash, and why people change their strategies because they evaluate that system during the crash. When you look at the portfolio, a lot of them are red, which is quite normal.
Yep.
And then they start to change.
Yeah.
But that shouldn't be the case. okay?
Correct.
So, but this is the process that you need to keep on tweaking over
Yeah.
the years.
And
right?
which goes back to your emotions as well. Because
Yeah.
let's say it goes down and some people get fearful
Correct.
Yeah.
and they change the system and
Correct.
I don't know what they're going to do.
Yeah.
Yeah.
Maybe they start selling, stuff like that. And
Yeah.
for other people, maybe they get greedy
Yeah.
and they start
Correct.
buying all
Yeah.
sorts of companies. Oh, it's cheap. I'm going to buy that. Oh,
Correct.
it's cheap. I'm going to buy that. And
Yeah.
then like,
Yeah.
of like, I don't know, 50 companies and stuff like
Yeah.
that.
Mm.
So you want to stick to
The system, yes.
a system, a process that
Correct.
you've already nailed down. This is what I'm
Before
gonna
the crash happened.
I'm
Yeah.
going to follow because then
Yeah.
that keeps your emotions
Yeah.
in check
check.
as
Yeah.
well.
So you need to know that, during crash, don't change your system. Only change it and improve it after the crash. Right.
Okay. And then, I mean,
Evaluate.
it's happened. You have
Yeah.
personal experience as well.
Yes,
where you've,
correct.
like, there's always
Yeah.
a temptation to
Yeah.
do something extra
Correct.
during
Yeah.
these moments
Yeah.
of like
Yeah.
uncertainty, right?
I mean, how Rusmin and I handled the crash since 09 until now, I think we've been through a lot of crash. It's very different from like we've been through the 09, we've been through the Euro debt. I think
Yeah.
Euro debt, we was too afraid,
okay.
to go in a lot. So
Yeah.
when we hit I think the China stock market crash, we were very aggressive.
That was in 2015, right?
2015, yeah.
Euro rate, there were two,
Yeah.
right? One is 2011, the other one is 2012.
Yeah.
That
Okay.
was the first time I learned was in 2011 that, hey, I
Correct.
shouldn't time the market,
Correct.
Yeah.
be more aggressive. And then
Yeah.
2012 came again. That was the second opportunity.
Correct.
That, we decided to go in.
Yeah.
All right. So
More
that you
aggressively.
stuck to the system that point in time.
Yeah.
Yes, correct.
Yeah. Then
Okay.
since then, I think 2015 came, and then
Yeah.
of course now you have 2018. There was a trade war.
Yes.
Right? Okay.
Yeah.
And then of course you have COVID 2020, and then recent one I think. Which
But
is
I remember when COVID happened, we were like quite we were scrambling. I mean, not scrambling in the sense we were prepared.
Yeah.
Yeah.
But there's so many things going on. There's so much action, and there was like, should we
Yeah.
do this? Should we buy a bit more?
Yeah.
Yeah.
But in the end, I think we stick to the
we
rule.
stuck to the system.
Yeah, yeah.
And
Yeah.
things. And
A lot of
things
people
went up.
ask us, why are you not buying that? Why are you not buying that?
Okay.
We say we have a system that
Yeah.
we stuck to, right?
Okay, and then
Yeah.
now we have. I don't know what's going to happen right now.
Yeah.
Yeah.
It's a pretty volatile market at this point in time.
Yeah.
Yeah. Okay, so those are your 4
Yep.
things that you follow, right?
Yes,
You
correct.
Basically, keep your emotions in check.
Yep.
You need to have cash. You must have a watch list
list.
and stick to your system.
Yes, correct.
So I think these are things that I think all of us can easily understand
Yep.
and follow. So I think the next question is like, so you have this thing in place, the system in place. The question is, so what do you do now? When do you strike? How do you know when to actually invest?
Yeah. So in most of the time, you should not be doing a lot of things. You should be doing nothing, right?
Okay.
And because normal market condition typically will trade at a reasonable valuation, if not expensive, right?
Yep.
So usually for us, I think we start to take action only when we realize that the market start to have a big crash, right?
Mhm.
So I think good example would be COVID, right? So that
Mm.
was the fastest crash in the history, right? It
Yeah.
was 30
1
over
month.
over percent
Yeah.
in that 1 month period.
3%.
So
Yeah.
we started buying, not at the bottom of course, right? We
Mhm.
started buying when the market crashed about 20%, and then we
Yep.
bought, and then 25% S&P 500 down from the peak, and then we bought again, and then it crashed again 30% down from the peak, and we buy again,
Mhm.
and 35%. Of
Mhm.
course, we still have cash for 40% down.
Yep.
So that was one of the example where we will start to be more aggressive. And then recently, I think we also started to look at the market again, especially in the US. The door is opening up because the market had crashed more than 50%, right? So
Alright.
that was actually a good time to start your first tranche of what Victor mentioned.
So basically,
Yeah.
right now.
Yeah, which is right now,
Now,
right?
yep.
And of course, the US tech will be also worth your first or second tranche, right? If you
Yep.
didn't manage to get it, but
Okay.
if you already have it, or you bought it during the 2020 crash, right? And of course, you can choose not to add because it is already in the in the
Yeah.
portfolio, right?
I think is you can base on the peak to trough and see how aggressive you want to be, right? So
Yeah.
right now we are very close to the bear market, 20%, right?
Mhm.
But it was peak to trough about 18%.
But that's
So-
for the S&P. For the
S&P,
Nasdaq is already
yeah.
in
Yeah,
the
Nasdaq is
bag.
already.
It's
So
already
you
back.
you can be a
Yeah.
bit more aggressive for the Nasdaq, right? But I see S&P as a general,
Yeah.
I
And
would-
for
yeah.
Chinese tech, I think we did talk about few sessions, I think late
Correct.
last year and early of this year, right?
Yeah.
So that market have crashed. So I think now we are still down about 30 over %.
Correct.
Okay, so this is big crash. Okay, 30
Yes.
over % is considered a big crash. It was as high as 40% crash in March 2022.
I think we are more aggressive on the Chinese
Yeah.
tech before this thing happened.
So when you have market like that, usually it will be the most aggressive time
Yep.
to go,
Okay.
right? Yeah, of course
So,
you
okay.
don't want to allocate everything there.
Yep.
Right. So you kind of take a look at the market to see as
Correct.
an indicator of where you
Ye-
should.
Yeah,
basically
and
look for
also look at the
opportunities.
individual stocks, not just the market. right?
Correct. So I just want to make clear that we're not buying the market as a whole.
Yes.
We're looking at the market coming down 10, 20, 30% as an indicator of where the market
Yeah,
is.
because
Yes.
that market will give you the idea whether the market whether it's optimistic or pessimistic. Right?
Yep.
So you want to buy when people are fearful, and you buy
Correct.
and you will sell when other people are greedy. Okay, and
Yep.
you also, of course, the best indication is look at your friends.
Mhm.
Are they buying or are they selling? Are they scared?
Or just the general mood around you.
Correct.
And social media as well is another
Yeah.
indication of where the
Indications.
correct.
Yeah.
Yeah, so I think again, of course, it goes back to your watch list.
Yep.
Just because the market is down doesn't mean you jump in. You need to be prepared
Yeah.
and know exactly what you're buying.
Correct.
High quality companies
Be very, very selective.
at the right
Yeah.
valuation
Yes,
as
correct.
well.
Yeah.
Yeah, because I think the market coming down doesn't mean everything is cheap.
Yep.
Yes.
You got to make sure that the individual company that you're looking
Yep.
at,
Yeah.
checks
Yeah.
all the boxes and all that
Yeah.
stuff.
And of course sometimes when the markets have fallen and you buy at the right valuation, even though when the next crash happened, right, and fallen, right, it's still above the price that you bought. Like for instance, a lot of the companies that we bought, the FANGs and all this, they are still above the price that we bought.
But the valuation is basically
Yeah,
the same again.
the
when
same,
it crashed,
the same
right?
valuation. Yeah.
You're
because
just
the
buying.
intrinsic value has grown
Yeah.
over time.
Correct.
Yeah.
So it's just averaging up, but
Yep.
Yeah.
similar valuations basically.
So what I'm trying to say is that if you buy at the right price, it still can hold. You won't go down below your
Yeah, and
your
we tend
purchase
to
price.
hold anyway for
Yeah,
a long time
correct.
to come. All right, so I hope that was a pretty good, summary of what you can do to prepare for a bear market like the one we're
Yeah.
experiencing right now. There's no idea what was going to happen.
Yep.
Things are looking uncertain. So I thought, this would be a good roundtable to kind of just, get your emotions in check.
Yep.
Kind of have like a 4-step system like Victor has shared to kind of like just give you some direction of what you need to do. Of
Mm.
course, you're an experienced investor. This is probably like just another walk in the park for you, I guess.
Yep.
Yeah.
Because so many crashes have happened.
Yeah.
But if
Yep.
you're new, I think maybe this would be a lot more helpful as well. Yep.
Yeah.
So I think that's a pretty good summary, guys.
Yep.
All right. So once again, my name is Adam. That's Rusmin and Victor. I hope
Thank
this
you.
roundtable was really helpful for you and what you can do during this bear market. So if you like this roundtable, please hit the like button. Tell us we're doing a good job. And of course, any questions, put them in the comment section. And of course, subscribe to our channel. Many more roundtables coming up, and we'll love to see you again. Thank you so much.